let's jump right into this explainer and take a hard look at the limitations of national income data. We're going to peel back the layers and see exactly why a growing economy on paper absolutely does not always equal a thriving society in reality. We constantly hear politicians and economists championing GDP growth as the ultimate scorecard of a nation's success. But when you really dig into the actual math, well, things get pretty complicated.
Consider this for a second. If a nation produces 10% more goods this year, but to pull that off, everyone had to work weekends and skip their vacations, are they genuinely better off? Keep that tension in the back of your mind as we go through the official numbers today, because national income accounting has some truly massive blind spots. We'll start right at the tip of the iceberg: data inaccuracies. We have this tendency to treat national income figures like they're precise scientific measurements. But the reality is completely different right from the very start. Just imagine the sheer chaos of gathering this stuff. You're trying to aggregate every single tax claim, sales receipt, and factory output from millions of people and businesses. It is literally like trying to count the grains of sand on a beach while the tide is rushing in. And because of the massive lag time built into this whole process, those initial numbers you see on the evening news, they're usually just highly educated guesses. They really only become accurate as time passes and the real data finally catches up. And this brings us to a huge geographic divide. In developed countries, you've got highly formalized systems, meaning you can generally assume the data is at least somewhat reliable. But developing nations face a monumental hurdle. Huge portions of their daily economic output simply never make it to a recorded market. The gap is actually so severe that the United Nations System of National Accounts, the UNSNA, has to actively step in and work directly with these countries just to help them track their own economies.
Okay, so what happens when we plunge beneath the surface? We hit the invisible economy. These are massive, informal markets that are entirely invisible to official national accounts. And this is where the statistics really start to detach from everyday reality.
Here's the catch. Official data only cares about paid work. If money doesn't officially change hands, as far as the data is concerned, it simply didn't happen. Did you spend your weekend fixing a leaky faucet? Did you grow tomatoes in your backyard to feed your family? To the GDP, none of that exists. And this is absolutely crucial in developing nations, where eating homegrown food and doing poverty-driven home repairs are essential for basic survival, yet totally ignored by the data. Which leads us to a massive, shadowy sector, officially known as the hidden economy. By definition, this is economic activity that goes entirely unrecorded or underrecorded in national data. And we are not talking about a tiny rounding error here. This is a huge, mysterious chunk of human transaction. We're talking about unrecorded billions. Now, sure, some of it is intentionally hidden because it's completely illegal, like drug trafficking or under-the-table payments. But a lot of it is just everyday people hiding their income to avoid high taxes, dodging indirect taxes, or bypassing expensive health and safety standards. Whether it's a massive smuggling ring or just a local plumber asking you to pay in cash, it all vanishes into thin air when it comes to official national income. But it's not just about what's missing. It's also about what's ignored. Let's look at the hidden price tags, the true cost of growth. This is where official numbers blindly celebrate production, while turning a completely blind eye to the real-world damage left in its wake. It's honestly fascinating how GDP simply refuses to factor in the steep costs of resource depletion. When we measure economic success, we are essentially staring at the cash register and completely ignoring the warehouse. Think about it like this. If a logging company goes in and clear-cuts an entire ancient forest, our national income actually shoots up because of all that timber being sold. It looks like an absolute economic boom. But there is absolutely zero accounting in those GDP figures for the permanent loss of those trees and the depleted natural resources. We're literally getting richer on paper by impoverishing our actual physical environment.
And on top of that, GDP makes zero deductions for the severe external costs that we all have to live with every single day. A new factory might produce millions in goods, which boosts the national income. But what about the choking air pollution it creates? What about the contaminated water runoff? Or the endless traffic congestion added to your daily commute? Our actual quality of life takes a huge hit, even as that GDP line keeps pointing straight up. So, this all boils down to the human factor, measuring life, not just output. Standard accounting utterly fails to measure actual human well-being, because at the end of the day, an economy is supposed to serve people, right? Not the other way around.
Looping back to that question we asked at the start, a soaring GDP might just mean people are stuck running on a giant hamster wheel. The numbers might look absolutely fantastic on a spreadsheet, but if that growth is only achieved because everyone is relentlessly working longer hours and taking fewer holidays, it certainly doesn't feel like progress to the citizens who are actually living through it.
Here is a staggering statistical irony that perfectly sums up the limitations of all this data. Both an illegal drug syndicate and a dedicated volunteer caring for an elderly parent count for exactly 0 in official national data, but for vastly different reasons. The syndicate is deliberately hiding, sure, but the caregiver is uncounted simply because their incredibly valuable contribution to society is done for free.
It's a pretty sobering thought. Our relentless structural pursuit of raw economic growth might actively discourage the exact unpaid community-building activities, like volunteer work or raising children, that actually lead to a better, more cohesive society. Basically, if it's not monetized, the system tells us it doesn't count.
We also really need to scrutinize what it is we are actually making, the composition of our output. A country could boast a massive GDP, but a gigantic chunk of that output might be tied up in military defense weapons or heavy capital machinery. Those things heavily boost national income statistics, sure, but they do absolutely nothing to directly benefit or improve the daily lives of everyday consumers.
So we'll leave you with this thought to chew on. As the air gets dirtier, our free time completely vanishes and vital caregiving is totally ignored. All while that official GDP graph just keeps going up, what does national success actually look like? Are we measuring anything that truly matters? Think about that the very next time you see a flashy headline celebrating record economic